Rule 56, don't seek tops or bottoms. A lot of people, when they're new to trading and investing, they're only happy if they sell the top and only happy if they buy the bottom. In truth, you can never know where a top or bottom is until it turns the other way. Another important reason to learn trading is that we don't seek tops or bottoms, we seek to participate in price action. An investor can only make money buying long at spot if the price goes up over considerable periods of time. But when markets get choppy or when they retrace, investors bleed, and it's a very nasty thing to go through. When you're trading, you're seeking to time the market, and timing the market helps you to understand, is the strength of price strengthening or the strength of price weakening? Just think in terms of weakening and strengthening. In this video, I'm going to take you through the critical levels that you must keep your eyes on inside the stock market and also crypto. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. When we look into the major markets in the past trading session, they were all up nearly 1.5%. If you're new, a very warm welcome and welcome back CTKS family. We can see across the board of the stock market, Apple got hit and Nvidia, Microsoft, Google, Meta, Tesla, they did quite well. Also, the financials did particularly well as well. In terms of high economic impact events, we've got the FOMC statement and funding rate coming out on Thursday, May 8th. A lot of people are saying that the Fed will decrease interest rates. I'm going to show you in a second why this is absolute rubbish. The FOMC coming up, the potential of an easing is currently 3.2%. That's not a high probability. There's a 96.8% probability that the Fed funds rate stays exactly where it is. A lot of people don't look at the stats and then they're absolutely mortified when the stats come to fruition. Don't pray or hope, look at the statistics. We've seen levels of optimism return to the stock market and also to the crypto market. Optimism occurs when prices go up and pessimism or fear occurs when prices go down. Currently, the fear and greed index of the stock market is 43. Across the weekend, we've seen Bitcoin come down. And currently, Bitcoin is down to 95,718. Ethereum is trading at 1839. The crypto fear and greed index is currently at 53, and we've seen a bit of a bottoming action, not only in fear, but also in price. We're going to look into the specific levels now. If you're liking the content, please smash that like button, and if you're new, don't forget to subscribe. It's almost a bit counterintuitive. Traders don't seek to time tops and bottoms, but they specialize in timing the market. We do that by looking at intercorrelation and interconnection, and we can see when we look at the S&P 500, the Nasdaq, the Russell, and the Dow, and we put that against Bitcoin, Bitcoin is following the major market trends. This is important to realize because if the S&P 500 starts to come down, we would expect and anticipate Bitcoin also do the same. And from the other perspective, we also anticipate that if the stock market continues to rally, that will rally Bitcoin as well. Because Bitcoin travels 24 hours, 7 days a week and never ever takes a break. Unlike the lazy stock markets, we can actually use Bitcoin's price momentum to determine outside of stock market hours what the major market indexes could be doing. This is unfortunately a trick that very few stock market investors understand. Therefore, looking structurally at the S&P 500 and the major market indexes is really important, and we can see currently the S&P 500 is in the process of breaking out. If the S&P 500 came back as a worst case scenario to around that 5430, this still maintains a positive uptrend. And don't forget, we've seen day after day after day, this is a daily chart, of S&P 500 gains. If we get a pullback, of course, people will run terrified and start selling. But price waves are normal. Price is always moving in a wave. It goes down, then it comes up, and then it goes down and comes up. You get the idea. Price is always moving in a wave. That is not a problem. Let's zoom in to this particular price to see where the latest structure is hanging out. Just zooming into price action, we can see that we've been making a fairly good headway. But the structure is the thing that we need to look at. Now, how do we look at structure? By marking up your charts with level 1 and level 2 standard certification. And for the members of the monthly service, just right click on this particular back title and update the chart to get the latest lines. And we can see the current month's back color is blue. We can therefore see that there are a couple of key levels that we must keep our eye on in terms of the S&P 500. One is this 5672 level. The other one is the 5604 and the 5613 levels. We know ahead of time where price will interact and where it will either strengthen or weaken. So far, the S&P 500 is looking really good. It's got a lot of positive momentum. And after so many days of positive momentum, everybody anticipates and just demands that the S&P 500 keep on going up in a straight line. We, of course, know this is not exactly or entirely correct. The S&P 500, like every chart, is always moving in a wave. It's going up to a structural level, either accepting or rejecting that, and coming back, finding support until it can break out. Price is always moving in a wave between SLs, Stanfield levels, or also called CTKS levels. The wave-based function is purely, can it get above a level of structural resistance and convert it into structural support? The heavier the lines, the more buyers or sellers are hanging out there, and it does take time to convert a line from resistance into support or support into resistance. Looking at intercorrelation and interconnection is really important, and so far Bitcoin has been holding up incredibly well. If we find that Bitcoin comes down, doesn't realistically matter because anything above 90,000 is a clear bullish trend. But again, what's really realistically important? Let's look into this section of Bitcoin's price action to determine the ceilings and the floors. From a structural perspective, a vital understanding is that price moves in waves between structural resistance and structural support levels. Therefore, your major issue is to always understand where the structure actually inhabits the chart. And when we look just recently throughout that particular period, it's very plain to see that structural support and structural resistance is wildly important. If the structure becomes weak, we're going to the level below, and if that holds, we're going back to the level above. This makes the concept of structural passes and structural failures very important to understand, and we've seen a general weakness in Bitcoin. It's come down to test a lower structural support level, just south of 95,600. This basically tells us a bit of a story about how the stock market could be progressing. Remember, Bitcoin travels when the stock markets are asleep, and it measures global risk-on or risk-off sentiment. What we're seeing just across the weekend is that Bitcoin was retracing, and this retracement was present over a couple of days, which is really quite unusual. This suggests that the stock market rally that has been going on is losing a degree of steam. It doesn't mean that it won't come up, it's just something that you need to keep on your radar. All price action is just pinned between structural resistance and structural support levels. If you know where they are, you're fine. All charts are intercorrelated and interdependent, and we need to look at total crypto market cap as well as Bitcoin, because the crypto market cap moves as one. So when we look at the structure inside total crypto market cap, we can see that the structure inside total held Bitcoin and vice versa. We came up through so many sell levels. The sellers were very strong. We sought to break above it, but we're now back in it. Now, what does this mean? It takes a lot of effort and energy to exhaust the sellers. The buyers just get in there and buy, and if the sellers are too strong, it will push the price down. We're still in an area of structural support at the current time. It's going to be really important to look at the futures of the main market. So please keep your eyes on those charts. Just moving to a 15-minute basis and looking into the futures of the charts, we can see Bitcoin is selling down at the current time, and it's picking up the weakness ahead of time in the major market indices. This is normal. With the exception of Australia, Australia is looking pretty damn good at the current time. All charts are intercorrelated and interdependent, and when we look at ETH put in a big candle up and got rejected. Why could this be the case? Let's look at the structure that's inhabiting the market at the current time. If you know where the sellers are, you're ahead of the game, and you must know what's going on inside not only your charts, but the charts that impact the chart that you're putting money into, your money chart. So that's where intercorrelation, interconnection, and stacking probabilities comes in. Investors are not taught to do any of these things. Investors are simply taught, hey, it's a great company, put your money in so they can use it for a long period of time, no matter what the stock price is doing. Investors with trading have superpowers because they understand where the structure will hit a particular price. And don't forget, all of this is being done in real time. Let's have a quick look at gold. Is gold influenced by structure, or is gold somehow independent of structure? The correct answer is nothing can escape structure. Structure is the bee's knees of technical analysis. It's pretty damn good. Please let me know, where the heck did that particular quote come from? Do bees even have knees? So when we look at gold at the current time, we can see that it's been in a downtrend. Now, what is that indicative of? It's indicative of the VIX retracing. Now, literally gold is coming into structural overhead resistance. If it can get above here, this 3240, that puts into play this level of structure at the 3266 mark. If it can get above that, it's heading to 3300. But if it can't get above 3240, it's heading down to 3185. A lot of people think that they can just look at a chart and then put money into it and walk away, and they'll just make millions while they sleep. Unfortunately, this is not the case and has never been the case. Only scammers will tell you such things. What you need is to observe your chart and how your chart interacts with structure. If it's doing structural passes, it's going higher. Structural failures, it's going lower. That's it. It's as simple as it gets and as complex as it gets as well. When it comes to structure, structure is incredibly important. It is the literal ruler of charts and also of price action. When you invest in a chart, you're actually buying price action. So therefore, it would pay to know what the actual structure of the chart actually is. And CTKS gaps are an important thing to keep in mind. If we get structural failures above a negative CTKS gap, price can move down very, very quickly, fill that gap until structural support is hit. If it goes the other way, it becomes a positive CTKS gap where it can recover very quickly. These are where V-shaped recoveries occur. And it also applies to the upside. If you do a structural pass and a structural failure at areas of structural overhead resistance, it will move back into structure. This is why it's so important to know where the gaps are, either to the upside or to the downside. And downside gaps, negative CTKS gaps, are not a problem because they typically turn into positive CTKS gaps, especially inside the crypto market. Let's have a look at another price chart, ADA Cardano. we can see ADA had been doing really well and it's sold down with the rest of the market. But as always, what is structure up to? Well, let's just check it out. One thing that we know, the deeper and higher the seller concentration is, the weightier the lines are, the more clustered they are. This is exactly why we saw a rejection around that 72 mark. There was simply too many sellers, and when there's too many sellers, they exert negative price action and open up lower levels of structural support. That's why it's very important to know where your structure is. Please let me know in the comments, what do you anticipate in the next 24 hours? Do you think we're going to rally up, or do you think we're going to retrace? And don't forget, even if you have a specific case in mind, bear in mind that there are always three cases inside the market: an up case, a neutral case, and a down case. Do not only subscribe to the predominant case and say, oh, it must come down. But what if it goes up? You will be unprepared. I think inside the comments, it would be really good to just discuss, how do you prepare for the case that you don't believe in? As traders, we must always think in terms of three-dimensional thought. The price can go flat, it can go up, and it can go down, and price can change very, very quickly. To complicate matters, there's always structure playing out where price is always moving in a wave between structure. If it can't get above, especially if it has negative air in here, which just means the sellers are too strong at that level of structural overhead resistance, it's immediately coming back to the structural support. If it fails there, it's coming back to lower levels. But when it fails, it's coming back to this lower level at that time until the price changes. And don't forget, ADA's price chart is not just dependent on ADA's movement. It is dependent on Bitcoin, dependent on total, dependent on the major index futures, and many other charts. At the start, this may seem pretty overwhelming, but when you get into the hang of it, it's actually quite straightforward. Therefore, when we look at Rule 56, it's a deep rule. The reason that we don't seek tops and bottoms is purely because any particular price chart has intercorrelation and interdependence with other charts. It's also, its price action is moving between structural levels of support and resistance, of resistance back to support. Therefore, the potential of a top or a bottom is just utterly misleading. This is actually what keeps people out of the markets all the time and causes FOMO, or fear, uncertainty, and doubt. This brings another important thing that I wanted to share with you. You either defeat fear or fear defeats you. Now, what does this basically mean? Fear is uncertainty. Fear is pre-programmed by society. You are meant to fear things. Why is that? That's a whole deeper concept, but I'll explain later. But the issue is, when it comes to financial markets, people have, of course, uncertainty, because uncertainty is the thing that drives returns. The more uncertainty, the more potential return you get. The less uncertainty, the less potential return you get. There's a lot of fear that goes hand in hand with uncertainty. People want certainty. They treat the market like a job. They say, you must pay me every single day. Instead, the market is just like a business, and you're in control of that business when you control your fear. You will become fearful if you only hold one position and something else occurs, because that has just raised your uncertainty levels. Therefore, please pause the video right now and just give me an answer inside the comments about what you can do to enhance your prospects when price moves against you. And moves against you is just a concept that you prepared for one direction and another direction happens. I'm really looking forward to your comments. This is a great way to learn together as a community. And I will give you strategies in the next video. In times of market uncertainty, if you're investing in your learning, that will pay the biggest dividends. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.